The Dow rises for a few days as Nasdaq regains, but still week to week there are losses. This is the IG Trading Talk and I'm Manuel Koch. And joining me now are Salah Eddine Boumidi, the head of markets at IG, and he's at the Euronext in Amsterdam. Salah, so great to see you. Today you are the one at a stock exchange.
Indeed, thank you. Happy to see you guys. Yes, today we swapped, Peter and I.
Good to see you. Yeah, and Peter Tuchman, the Einstein of Wall Street, is not at the New York Stock Exchange today. He is at his place in New York City. Peter, also good to see you.
It's absolutely a pleasure, and I'm so glad that we swapped. Now we get to really we get to honor the first stock exchange in the world from Amsterdam, even before ours, from I believe 1678, right?
Exactly, this is what it is.
So. And two stock exchanges with a female CEO, I like that too. We see diversity is also in the finance industry. So yeah, I'm in Berlin. Good to see you guys. And let's talk about the markets, Peter. We saw the last days in Germany, in New York, that markets were struggling a bit from their highs. What do you see? What do you feel? What's the reason at the moment?
You know what? It's kind of fascinating. I mean, these markets are, look, it's important to note, as we always do, where the economy is, where the world is, where the virus is, where the vaccines are. You guys in Europe are on complete lockdown once again. Here in the States, we started to open up. We obviously, as the crazy country that we are, and the dislocation and disagreement in the political mode of those states that tend to be Republican are now reopening because that's the game they want to play. We're seeing an incredible surge in Florida with spring break, and in California and Texas, those states that are opening up are having surges. Here in New York City, once again, we are seeing it with the new variant that's coming in. So the obstacles to a reopening are still weighing on us, though our new president, Mr. Biden, who promised 100 million vaccines in 100 days, has already bypassed that, surpassed that, and is now promising 200 million. So we are stepping to the table. There is transparency and honesty when it comes to the virus and the vaccine. But as we know, there are still a lot of headwinds: confidence, anti-vaxxers, people apprehensive about taking the vaccine, and the political discord amongst here in the United States as far as that goes. And obviously, we're seeing what's going on in Europe. So the obstacles are still there. Is this weighing on the market? Perhaps, perhaps. Markets are trading at their record highs once again. When we say that, look, I mean, it's not at the number, although we've seen, look, let's look at the last week. We did see a couple of down days. And on my market, as you guys often know, I'm a short-term trader for the customers that represent within our company. We've built a business model around trading the market on close. And what we've seen at the end of the day is large sell programs. We saw it 2 days in a row, and the market did literally go from, had sort of a morning of bobbing and weaving, and then we ended up closing at the lows of the day. So that kind of gave me a feeling either the market feels fragile, either it feels a little bit toppy, and or it feels rotational. And I think Salah will probably address that as he discusses seasonal trading patterns, right? Even though we are in a new rule mode and the world, there is no playbook for where we are economically, financially, health-wise, globally, and whatnot, I'm kind of feeling a rotation here. So we are a quarter of the way into our year. We did have a big S&P rebalance last week. It was huge rotations in a lot of stocks. We've seen the tech sector a little bit under attack in a way, meaning that they're selling the outperformers while they're still profitable, and they're getting into the underperformers. But it's unbelievable. At every moment where we do see a little bit of a fracture and volatility on the downside in our market, 1 day, 2 days later, we are just completely, like yesterday was a fascinating day. It was almost a mirror image of the 2 down days on the upside. The market was struggling throughout the day, and then we got a big buy program on the floor of the New York Stock Exchange, $2 billion to buy around 2 o'clock, and the market reaffirmed to me that the appetite for equities, the appetite for getting into stocks, whatever rotation and sector people are interested in, is still there. I will note, though, that it's important to say that we are seeing this huge influx of SPACs, right? And they're not always spectacular, if I may use a little bit of a pun, and the IPO market, right? What's happened, it feels like that the market is, and then we had the Wall Street bets and the meme stocks and all that. I think the excitement over that stuff is tampered down for the time being. I think the supply of SPACs and new listings is a little bit robust at this point. We've seen 217 new SPACs since Jan 1 and a lot of IPOs. And what we're seeing is, well, they're in the beginning of the year, the interest was solid, yet not that excited. Then we saw an influx. We saw this incredible surge of SPACs and appetite into them. And those, all of them are priced at $10. We're opening at $10.50 to $11.50. What we've seen now with this incredible deluge of SPACs, and that's a story we should probably have one whole session about, to explain to the public what they are, what they mean, how they come to market, and what it's all about, is that they're starting to open below their deal price, which means that there really is an oversupply on them. So the market is fascinating. I believe it's in rotation. There's still an appetite. There's still a strength. Every time I kind of think we're going to pull back and see a little bit of a sell-off, the market sort of reaffirms the appetite it has for buying. So I'll go with that. I toss it to you, Salah.
Exactly. You talked about rotation in a fragile environment. This is something what we definitely need to have in mind. And of course, last week in March that we are running right now is seasonal, from a seasonal perspective, bearish. But April is the best month for Dow Jones since 1950. Average return is almost 2% for that month. So from my point of view, even if we have a fragile environment, the rotation will keep on, especially in April. Maybe selling may go away, something what we don't have anymore actually, but this is a pattern that could come back for the summer this year. So my question is to you, Peter. Technically speaking, the rally is still in a bullish rally. Do you think that April will fail from a seasonal perspective?
So, you know that I spoke on the IG trading day yesterday in Amsterdam, and that was incredibly exciting for me. And what it kind of reminded me of, as I sort of did a little bit of investigation into how quick, because I like timelines, I like to be accurate about how things were, and we know the market topped out on February 12th. We know it bottomed out on March 23rd. But what I didn't know, because the talk I had yesterday was about trading pandemics and how markets have traded these crises and how each one has been different and the recoveries that have followed. And the 07-08 financial crisis took till 2013 to get back to even, right? That was a function of a lot of things. It was $800 billion over a 3-year period that was put into the market. The crash of 2020 saw $3 trillion put into the market over 3 months. And we saw by August, right, a back to even, a retracement of the sell-off. And obviously, we've seen a huge rally since then. So it's kind of fascinating to see. Technically, the market still feels bullish. You know, there could have been a little bit of a seasonal anxiety or situational anxiety around March this year, because while I don't know how we're going to end up March, let's think back to where we were a year ago, right? On the 23rd of March, the market hit a low. That was after 6 weeks of 1,000-point sell-offs on a regular basis. We know why it happened. It happened because the virus started traveling across the world and the reality became severe. We know that the environment had been very robust, was over-margined. People were just bailing on the sell side, and they weren't listening to Salah, who would have said, guys, or David Green, this is a generational buying opportunity. But what we saw was that the incredible stimulus that came into the market is what caused that incredible rebound. It didn't really help the economy, although I'm sure they would have hoped so. But what I mentioned last night in my chat, which was something that sort of come to my brain, is that we could have never predicted. Look, we have a complete global economic shutdown. No playbook for that. We have a virus that's killing people all around the world. Not a human is untouched in this situation. We put $3 trillion into the market over 3 months period of time. Unheard of, incredible. The Federal Reserve, as I looked more into the nooks and crannies of that original stimulus package, one of the things that I think supported a lot of the corporate situation was that not only were they buying treasuries and bonds, they were buying corporate bonds, which gave sort of a stop loss against fear of a lot of these companies going belly up. Let's be clear. Nobody was getting on planes. No one was getting on cruise ships. Nobody was going to sporting events. No one was going to casinos. Hospitality was shut down. So, and yes, there was small business loans being put out. Yes, large corporations did get a lifeline. But the bottom line is none of these guys fail. Few of them fail. A lot of small businesses did. So the Federal Reserve spoke last week. They made it clear that they still have tools in their chest to use to support this market in case there is any sell-off, right? Their goal for inflation, their goal for employment and whatnot are being reached to a certain extent. But they are still being very flexible and did make it clear, Mr. Powell said, and Ms. Yellen said, that they will pivot if necessary, that they gave a forecast that they're not going to raise interest rates for a little bit. But they also said that depending on what's going on, see, we are the economy and the recovery and the reopening are still wild cards, right? We don't know how that's going to go, and we don't know how long that's going to take, how long it's going to take. And what's the wild card on top of that is the confidence that people are going to feel. It's not as if we're all going to ring a bell one morning, we're going to go, masks are off, pandemic is over, and everyone's going to get back on a cruise ship. That's not going to happen, right? So that's still the wild card and what's unknown. But we do know where we have tools to help support the markets is what the Federal Reserve has to offer. So I still think they've made it clear that they're going to backstop everything they need to, because the last thing we need with a fragile economy is a fragile market, right? And so I think that contributes to the bullishness in the marketplace. I think there is markets, as you've often said, Salah, are forward-looking. So the bottom line is when we do reopen, whether it's 6 months, a year, or more, right, it's going to be a slingshot because all these people have been sheltered in place for so long globally that when the buzzer goes off and we start running for the cruise ships, it's going to be an incredibly robust reopening and recovery. And if markets are forward-looking, then maybe that's contributing to some of the bullishness.
Peter, Jim Cramer, the famous US TV host on CNBC, said he would put 5% of his money in Bitcoin. Do you think this is a smart strategy, or is it just like a big appetite to make fast money?
Very good question. So this Bitcoin story is, continues to evolve, continues to unfold, and it's fascinating who's jumping on board, right? There are the FOMO people, fear of missing out, right? The stock has gone from $5 to 20,000, back to 3, up to 6, up to 8, now in the $55,000 range. People are believing that it's a hedge against inflation. It's an alternative to gold as a way to hedge your positions globally. You've got a lot of people jumping on board, the Elon Musks, the Mark Cubans. A lot of the brokerage firms are starting to create ETFs around Bitcoin. So it feels to me, as much as I can't wrap my hands around it, that it's here to stay. Is it going to continue to be volatile? Absolutely. Does it feel like it's going to 100,000? Absolutely. Could it go down to 25 before it gets up to 100? Absolutely. Is Mr. Kramer's getting involved, and Kevin O'Leary and all these guys, finally, after pushing back on the Bitcoin story for so long, finally having to jump on board an endorsement of the stock? No, right? I love Jim Cramer. He's super bright. He's an educator, and I love it. But that's not enough of an endorsement for me. If when we talk, Salah and I have spoken with David Green, and I've gone over the Bitcoin story, whether you go over the stock riot or you go over the other of coins, and we try and put them in our graphs when it comes to technical analysis, there is a big vacuum between the 55,000, 60,000 level and the next real buy support, right? There's $25,000 room that if this thing were to go bearish for a minute, and there would be a little bit of a retracement, and there would be some negative sentiment around the Bitcoin story, that this thing could retrace, right? We know how volatile it is. We know that one or two sellers wanting to get out of the space or any negative news about it in the world financial markets could make this thing come in. So, you know what? It seems like it's here to stay. I'm loving watching the story unfold. I don't know if you know this, guys, but I'm an art collector, and I've supported young artists, and I've brought art to the floor of the stock exchange, and we've had a lot of fun with it. And one of the new manifestations of digital currencies is this new thing called NFTs, right? NFTs are digital art pieces that are being sold. It's once again something I can't wrap my head around. I'm trying to figure it out. It's basically owning a PDF of a art piece in your wallet that is basically backed by digital currency. It's as abstract as can be. It's people are running toward. I have a friend named Wisby who makes these little bears called the gummy bears. He dropped a bunch of these NFTs last week. In an hour and 40 minutes, sold $4.2 million, right? So the appetite for the abstract in the digital space is incredible. Can you imagine if everybody jumped on board this game? Everything would be off to the races. So that's more of an endorsement for me than Mr. Kramer putting 5% of his portfolio.
We need an NFT of Einstein from Wall Street, definitely.
We are.
This is something what we need as a non-fungible token. Isn't it interesting, Peter, that years ago, 2-3 years ago, asset managers worldwide started saying, hey, if you want to invest in Bitcoin, please just don't exceed more than 1%. Now we are talking about 5%. This is a multiplier of 5 within only 3 years, 4 years. So people are seeking for, of course, alternatives and return and performance. So definitely be careful of that, because return is always combined with risk. So if you take a higher return, you never will get it with higher risk. So this is normally a function of risk and return. But going back to education, because we are working with technical analysis, which is for me the only key with volume analysis for cryptocurrencies. I mean, fundamentally, I can't work with any fundamental stuff in cryptocurrencies. But going back to education, I learned trading by myself. I'm not coming out from a family who is a stock trader family. A lot of people come back to me and say, how can I learn it if I don't know anybody? So, Peter, I learned by myself, and I think you, as somebody who is experienced and working on the stock exchange, can you tell us something about this? Because you, I think, have been also a self-educator by your own.
You know what? I also don't come from a family that was in finance, and though some parts of the family were in business, my career has taken me through learning the game of trading on the floor of the stock exchange. But you know what? As my career sort of evolves, as the trading environment with technology, not technical analysis, but technology, has sort of tossed me a little bit, because I don't own a computer. I'm not a big tech person. So where I've guided myself, or I have been guided within the space, is to try and understand what the market's telling me it thinks of things, right? So I look at myself not as a financial advisor, not as a stock picker, but as somebody who's a forensic, like a detective, right? A forensic analyst of what the market is doing. Why is it doing it? And I do it within the microcosm of 1 day at a time, right? Could be sometimes 1 hour at a time. I track markets and the movement in the S&P by supply and demand, but I try and understand around that why it's doing what it's doing. I think it's really important in this environment where we've seen this incredible new democratization of the trading, of the investment and trading community, right? Courtesy of all the new trading apps, courtesy of the pandemic, people sheltered in place, right? That we're seeing an influx of new young people, old people, men and women, wanting to get involved, controlling their own money, their own destiny, investing in stocks and not in stuff, right? And so the key point that we need to know is, which is something that I'm learning from you and David Green, and one of the reasons we've curated the Wall Street Global Trading Academy, is that at the end of the day, you've taught me that the only defense against a volatile market is technical analysis. When a market like New Rules 2020, in a market where there's no clarity about the guidance going forward of these companies, because we don't know what the reopening is going to look like. We have absolutely no idea when profitability is going to come back to these companies that are running on 25 and 50% capacity, whether it's a restaurant, a cruise ship, or a casino, right? So at the end of the day, when we see stocks like GameStop, or we see this mob mentality as an investment strategy, that is a mistake. Fundamental analysis, though it's been the historic template of investment, doesn't really work at the moment right now because we have so many unknowns. So at the end of the day, if one is an investor, we know that markets net go higher. They've done that since the beginning of time. That's all fine and good. Pick a sector that makes sense to you. Sorry. Pick a sector that makes sense to you and get involved in it. As a trader, though, the most important thing, as you discussed with Bitcoin, is that we've seen it with the GameStops and whatnot, that you really need to be patient, you need to be consistent, you need to be disciplined, and you need to learn technical analysis, because the volatility that we've seen over the last year is generational, right? We're seeing stocks go from 30 to 480 and back to 30, right? Not just GameStop, but whole sectors, right? It's just the way it is because of the appetite and the mob mentality and the strategies that people are choosing. We're seeing stocks that if one is not using technical analysis, you can get blown up like this. So we, as people who like to inspire people to get involved in the markets, whether it's from an investment point of view or a trading point of view, implore everyone to get technical analysis as a tool in their toolbox, because that will be their only defense against a volatile market. We offer a beautiful course. We've collaborated with IG in Holland and Germany and other places with you and David Green for the Wall Street Global Trading Academy. You guys can look it up, right? But it's a basic text or a video class seminar, which gives you the language of the stock market, the charting, technical analysis, pivot points, moving averages, relative strength index, and it gives you that little extra probability and edge to trade a market that is trading generationally in a big moving way and so volatile and dangerous.
Guys, thank you so much. Always great to listen to you, Peter. Maybe one very last question, and maybe with a quick answer. Do you believe in a second term of President Biden?
Absolutely. 100%. He mentioned it yesterday. He's going to go up against Donald Trump, who's never going to run, I don't believe, because in my opinion, by then there'll be so many lawsuits, he'll be so busy in court, he won't even be able to leave to bother people any longer. Yes, I believe a second term is in the works.
So thank you so much, Peter Tuchman, the legendary Einstein of Wall Street, over 35 years on the floor of the New York Stock Exchange. And today, Salah Eddine Boumidi, head of markets at IG, today on the floor of the Amsterdam Stock Exchange. Guys, it was so good to see you. Appreciate your time.
Thank you so much.
Thank you so much, guys. Thank you.
And thank you for watching. This was the IG Trading Talk. For more information, check out IG.com. Thank you for this week. Have a good one.